you are going to see America's economy actually falling into recession in the first 6 to 9 months of next year, and the rest of the world's economy being either in recession or weak. So, very interesting and challenging and volatile times lie ahead.
Monaco 64, home of alternative economics and contrarian views. Today we've got Simon Hunt. He's from Simon Hunt Strategic Services. I recommend you look at his blog. It's simon-hunt.com. Simon, it's great to have you on the channel again.
Well, thank you for having me. I'm honored.
Oh, you're welcome. And I always like to hear what your opinion is on the state of the world. So let's start off with geopolitics, which in my mind poses a big risk to everything. And there's a few topics that you might want to cover that we are interested in, at least here in the channel, and that's first the Donald J. Trump threats. That he's threatened BRICS about not using the dollar. I see that today. He's threatened the EU if they don't buy oil and gas from the US. And maybe if you could cover as well what's going on in terms of wars around the world and how do you think that's going to evolve?
Wow, you're asking a lot, aren't you?
I expect a lot from you, Simon.
Um, well, let's start where you began, BRICS. Even before Trump's victory, there was a policy in Washington to try to break up the BRICS organization, because should it mature into a living entity with its own operating secretariats, new development bank that actually is issuing loans not in dollars but in local currencies, and that in due course, because it could never happen immediately, that BRICS would develop their own currency. Because if that happened, then America's hegemony and control of the world through the dollar would be finished. Just another failed empire. So what has been happening is that Brazil is now a weakened partner in BRICS because the powerful ministries have now turned against BRICS. And from what I am told, Lulu has to tread very carefully, because one call from Washington and he's back in jail. So Brazil takes over the presidency of BRICS next year. So you're going to see no growth. The other BRICS partners have accepted that, in my view, and they will use next year as a time to consolidate, build their own internal structures. Now, with Trump in the White House, there is clearly a policy to attack BRICS in more ways than one. And that means trying to offer, say, to Russia, my guess is, but it's the sort of thing that will be offered, you can have Ukraine, but you've got to disassociate yourself with China. And Washington will say to China, if you invade Taiwan, we won't stop you. Now, these are guesses, but it's the sort of thing that is likely to develop. And then with Iran, I think the policy is going to be to isolate Iran. And in fact, more than that, to try to prevent Iran from exporting oil to China. So there is a lot that is going to be in play, not just next year, but for the next 4 years, with the ultimate objective of restructuring the world into the American hegemony. Will it succeed? I doubt it, because I think that the BRICS, the main BRICS partners, Russia, China, and Iran, Iran is such a powerful part of the north-south, of the communications within the BRICS group of nations, the north-south corridor, the shipping lines, the development of Iran by China through investing in Iran's manufacturing to make Iran the export base, the new export base of Chinese goods. So what is evolving is very important, and it goes further than that, because there are scenarios now being painted to produce with Saudi Arabia. So this scenario paints, I'm not sure whether it's correct, a two-state solution to Gaza. In return, Saudi Arabia gets a full defense treaty with America, including the nuclear umbrella. But then you have to look at the other side of the coin. Relationships between Saudi and Iran are intensifying. There are currently naval exercises in the Oman Sea between the two countries. And behind Iran is China and Russia. Russia will soon be signing its new very comprehensive treaty with Iran, which includes defense. China has already, a couple of years ago, signed a 25-year treaty with Iran, partly for oil, partly to help develop the economy. So this is a big, huge power play going on at a time, in my view, where you are going to see America's economy actually falling into recession in the first 6 to 9 months of next year, and the rest of the world's economy being either in recession or weak. So very interesting and challenging and volatile times lie ahead.
So just before we go further, wanted to give a big shout out to Dirty Men Safe. Great affiliate, great sponsor, great to work with. And I think it's a great product, Dirty Men Safe. So what is the Dirty Men Safe? Well, let's have a quick look here at what Dirty Men Safe provides. Underground safe solutions, store your valuables like gold, silver, coins, documents, and crypto wallets. As you can see, they've got a Christmas special, free 10-pack of coin holders with every safe purchased. Hidden protection, instant access, Dirty Men Safe, fast delivery, 10-year warranty, engineered to be waterproof, 30-day satisfaction guarantee, materials used rated for 50 plus years underground, free salting metals and anti-detection, holds 100 ounces to 350 ounces of loose silver rounds. So if you want to find out more about Dirty Men Safe, click the link below in the description of Dirty Men Safe. You get 10% off if you use my link. Yeah, and interesting you mentioned the economy, but we'll come back to that in a minute. Just wonder, so it looks like there's going to be it's not going to be as easy as it seems on paper for the U.S. to maintain its hegemony. And also, I would say we'll come back to the economy in a minute and the U.S. Hegemony part. But just wondered if you could give your opinion on the EU. Are they just gonna like allow the US to do that to them or is it just Trump trying to kind of start a negotiation about buying oil just and gas just from the US, seeing that I think other sources of oil and gas are probably cheaper and easier to get?
Well, obviously, Trump wants Europe to buy all its oil and gas from America. So one way or another, it's not going to allow the pipeline routes to be reopened. And I think this comes back to the future of Ukraine. I think it's quite possible that an initial ceasefire will be arranged, but it will only be arranged on Russian terms, because what Russia does not want to see, which is what happened after 2014, is to have a ceasefire and then to see Ukraine rebuild and NATO rebuild and replenish their forces. That's the first point. The second point, which I think is the big one, is what Russia wants to secure, not just for tomorrow, but for the next 10, 20, 30 years, is their own security. They have seen how, ever since 1991, NATO has encroached towards Russia's borders with the Maidan Revolution in 2014 representing the last stepping stone towards Russia's borders. So what does this mean? It means that Russia will need the space for their radar systems to be able to forewarn any impending attack when in a few years' time, America will have hypersonic technology or the equivalent. So that does not mean the boundary will be at the Dnieper River. It will mean the whole of Ukraine. So I think that it is possible that in 2025, we will see a ceasefire, but the negotiations that will follow will be extremely tough and very protracted, and big question marks whether they will succeed.
In terms of war, what is your thought on the probability of a major war? I mean, we have proxy wars all over, but there's a lot of talk of World War III and things like that. Just want to know what do you think about that, and whether, as we move to the economy, whether the BRICS, Russia and China, can actually wage economic or financial war on the US, if that's probably the best way to go about it. Just like the United States did with the old Soviet Union in the 80s, it pushed the Soviet Union into spending even more and then eventually just collapsing from within.
Big, big question, Mario. Um, my scenario that I'm working on, which could get disrupted should a war somewhere break out. But I think we escape a war, a major war, until 2028. I think that's when World War III will actually break out. That will coincide with our economic cycle, which then starts collapsing. So you have war and an economic collapse, which will lead from 2028 onwards to rolling recessions or depression. So what this implies is ongoing mini wars, but not a big one until then. And that rather fits in with our economic scenario, where we have mini cycles leading to the big cycle starting in 2028.
Interesting, because I've been looking at the bond market and like the 10-year treasury yield, the gilt yield, and they've gone up a lot, of course, since 2021, 2022. They topped in October of 23, and now they're looking to maybe rise again. They look like they're pushing those highs from well, 15 months ago, and I don't see them going further down. And like uh, when I extrapolate the move from 2020 to 2023 in yields, from around 2025, I get 2028, which kind of corresponds with your view of things. And the other thing that's interesting, though, is that the markets and the mainstream financial press, they're all talking about American exceptionalism, how and we can see that the MSCI World Index,
Yeah.
there's all
Yeah.
that talk, but at the same time, if everything was so great, why does first Donald Trump want to make America great again if it's exceptional? And second, why does he feel that he needs to start trade wars if America is doing so well? So is that the way you see things? And maybe with that, we could move on to the markets, like the bond market, how you see it, the stock market, and also precious metals, gold and silver especially.
Yeah. I think that everything I piece together, the American economy is not nearly as strong as it's being made out to be. The BLS revised the employment data for the year up to March 24 by 818,000. the Philly Fed does its own analysis of employment, and they have come up, and the figure that they came up with up to March 24 matched exactly what the BLS's revised figures were. So for the second quarter, the Philly Fed has employment falling, in contrast to the BLS having employment rising by 1.1% year on year. So I think that the second half of the year, the final figures, which will probably come out in February next year, will show falling employment for the whole of 2024. What does that tell you about the economy? What does that mean for retail sales? Well, in nominal terms, retail sales for the first 11 months of this year rose by 2.4%, but official CPI increased by 3% in the first 11 months. So in real volume terms, retail sales fell by 0.6%. Interestingly, the government data shows that in the first 11 months of this year, retail inventories rose by 11.2% year on year. What is that telling you? It rather matches the fall in physical retail sales. Now, CPI, as we know, is a highly manipulated number. And if you go back to the original workings of CPI prior to Arthur Burns in the 1970s starting to change it for his own reasons, if you use the unadulterated CPI number that John Williams of Shadow Stats does every month, actual inflation averaged in the first 11 months of this year 10.8%. So whatever is the real inflation number, which is what households who do their weekly or monthly shopping have seen, that was probably one of the main reasons why so many of them went out of voting for the Democrats to voting for Trump. So I don't know what the real number is. Some people say, like David Gelman says it's 8.6, but whatever it is, it's showing that retail sales were weak. Now, as we go into 2025, we will see with all the revisions coming through, we will see a much weaker economy. Then you have to look at the political side of it. Is it politically astute to have a weak economy in the first 6-9 months of your first term of office to get rid of all the stupidity and shams and hoaxes, etc., that have taken place? Well, Elon Musk on the 29th of October made the following comment: "We have to reduce spending to live within our means, and that necessarily involves some temporary hardship, but will ensure long-term prosperity." So it's not just going to be the way the economic chips fall out, but it's going to be an intentional policy to weaken the economy early on in the new administration. So, what does that mean for markets? It means that we've probably started a 6 to 9 month fall in equity and commodity markets. It means, therefore, that the dollar will probably peak in the first quarter and then start a multi-year fall. It implies to us anyway that short-term 10-year treasuries will fall from the 4% level to the 3% level. But then by the end of next year, as the fiscal and monetary stimulus kick in, not only in America, but globally, that recovery comes through, but very inflationary, added to which you're going to see food prices soaring. And already this year, I've forgotten the number, this year the FAO food index is up 8.6%. For climate reasons and other physical reasons, you're going to see food prices rise very sharply in 26 and 27. We're probably going to see energy prices, oil prices rising sharply. So by the time we get into 2027, we are probably going to see a repeat of what we experienced in the late 1970s and early 1980s. US CPI, or actual inflation, 13 odd percent, global inflation 15%. What does that mean for long bond yields? As you started by saying, they're going up, but they'll be into double-digit figures. And what will double-digit figures do to a highly leveraged global system? It will crash. That brings you into not the mini cycles, but the big cycle of 4 to 5 years of rolling recessions, if not depression. And that coincides with our war cycle.
So it
So
looks
it's a very volatile outlook. And really for people, institutions, everybody, it's to play the short cycle, don't invest long term.
So it looks like your view for next year is fairly, even though US will go into a recession, as you see, it looks like you don't see any major crises. Of course, it's difficult to predict, but we saw the Fed that they pared down the amount of cuts they're going to do next year to two. So, in your view, that's probably going to increase in terms of cuts that they'll have to do. And they also said, Jay Powell, that they're going to keep rolling off their balance sheet or doing QT. Do you see that reversing sharply?
I think that will all reverse sharply in the second half of the year, but tightening up liquidity fits what I think the Trump administration wants to see in the first 6 to 9 months,
so
laying the foundations for better growth in the future.
and also that they're able to blame what's happening
Exactly.
the previous administration. Yeah.
Yep.
Let's end with your view on gold and silver. Gold and silver have had a very good year. Maybe silver in the last few days. We've seen quite a few losses, but it's still up on the year. Of course, Bitcoin and cryptocurrencies are overshadowing gold and silver, but it doesn't distract me I'm still committed to gold and silver because they've proven themselves for thousands of years, and Bitcoin hasn't been around that long. So, how do you see both metals going forward?
I think that the current correction is a time to accumulate. Um, my guess, and it's only a guess, is that we will see the bottom in the first quarter of next year in gold and silver. And then we're going to see much higher gold and silver prices, regardless of what cryptocurrencies do. I mean, I have in my apartment, in my safe, I have silver bars. So I am betting the way I am speaking.
I thought you were going to say you have your crypto hard wallet in it.
No.
Trezor wallet. Well, Simon, that was great. Always nice listening to you. And uh, yeah, I want to wish you a Merry Christmas and a happy and prosperous New Year.
And the same to you. And thank you very much for having me on.
Oh, you're welcome. Thank you very much for coming on.
Cheers. Happy Christmas.
Cheers.